Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Simon Evan-Cook of Premier Asset Management. Hello, Simon.
Good morning.
So you are a multi-asset manager, which means you have the luxury of looking across all assets and all markets. Where are you feeling worried about today?
Well, there's one place that stands out for me if we're talking in equity land, and that is US equities. And the thing is about US equities, because so much of the media noise and so much of the studies are done on US equities, that creates the impression that all equities are expensive and worrying. And I really don't think that's the case. But US equities for us, it's not a Donald Trump thing. I mean, he worries me on some levels, but it's not to do with equities. That is down to valuation. I mean, the way we do it is we look at long-term valuation measures, particularly the Shiller PE, which is the 10-year average of earnings. And that currently is on about 29 times, and that's only been bettered, as in, well, worsened, in 1929 and in 1999. So your famous market peaks, famously bad times to be buying equities, and that's where we're approaching now. But it's just not the case in the rest of the world. Developed markets, X that, you're probably looking at about 14, 15 times. So not cheap, but all right. And emerging markets maybe on 12 times or so, because they're not particularly liked at the moment. So there's a lot to go for in the world of equities. It's just that it's the big lump, which is US equities, looks too expensive in our book.
And the thing about finding somewhere too expensive is you've got to sell it. And the thing about selling something is you've got to buy something. So where are you reallocating that cash?
Well, I mean, you say that's difficult, but it's only difficult if you're a US investor, because if you're a UK investor, I don't need to hold US equities. I can quite simply say, no, thank you. And that's effectively what we're doing across most of our funds, because I can go and buy shares in the UK, in Europe, in Japan. I mean, literally anywhere else in the world but the US. I mean, it's a big world out there. There's loads to go for. So we're having no trouble finding good investments currently. It's just, are you brave enough to step away from US equities, which have been the best performer over the last 7 or 8 years, but look sort of nose-bleedingly expensive?
And you mentioned the UK and Japan there as potential investments. Is that where you're reallocating cash?
Yeah, so particularly UK and Europe at the moment. They're disliked because of Brexit, because of the politics situation, but economically it's okay. I mean, I'm not going to sort of say it's amazing and the European economy is going to go places you wouldn't imagine at the moment, but there are companies there that are doing fine, but they've been marked down because of Brexit, or they've been marked down because of the European political mire. And it's always valuation that dictates your future returns. It's never about what politicians are going to do or what the economy is going to do. So, yeah, that's where we're allocating. And Japan as well, you've got decent valuations there, bottom of their sort of historical range currently. And again, it's a place where active managers can really make you an extraordinary amount of alpha because the market is so inefficient.
UK and Europe have enjoyed very solid returns over the last 3 years. Do you expect to continue, or are you expecting slightly muted returns versus the last 3 years?
What I won't do is give you a prediction over anything as short as 3 years or 1 year. All I can say is that I think for the next 7 to 10 years, which is the horizon you should have, I think you'll make decent returns. Now, that might be every year you make an okay return, or it might be that it's okay, it's great, and then in year 3 it's absolutely terrible and then gets better after that. I do not know what the journey is going to look like, and I don't even bother trying to predict that. I just know that if you invest today and you're investing for your pension or for your ISA or to pay off your mortgage or whatever it might be, it's a pretty reasonable time to invest.
Simon, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.